Hello everyone. So welcome to another video on this playlist which is on cash reconciliation, which is a subject in the financial accounting course. Okay. So I have already made a few videos on this subject, and finally now we are trying a new problem, that is what you see on your screen. Okay. So if you are already aware of some of the earlier, if you are directly coming to this video, first look at the earlier videos. And in the earlier videos, we have tried solving some problems like this. So we have seen some sample statements, and then finally this is the main diagram on which we are doing this work. Okay. So please review the earlier videos on the subject of cash reconciliation from my playlist, and then you can see this video which is about this problem E7.8. By the way, the textbook I am referring is again Financial Accounting 7th edition from Kimmel, Weigand and Kiso. Okay. So from this there is a E7-8, that is a problem that I am trying to solve it here. Okay. So let's see what this is. So the following information pertains to Joyce company. So there is a cash balance and then bank service charges, some information is given. Finally, prepare a bank reconciliation at July 31, 2014. So what is a bank reconciliation? Bank reconciliation means how to adjust, are there any changes or any adjustments to be made to the bank account and also to our accounts, to the company accounts. Okay, so that reconciliation I'll show you. Journalize the adjusting entries on July 30th. So how to make the journal entries? So these two things let us see. First, let us go for the first one, bank reconciliation statement. Okay, so the company name is Joyce company. So let me write here Joyce company, and bank reconciliation statement. And the statement is dated July 31, 2014. Okay, so July 31, 2014. Okay, so this is the heading. Okay, so far so good. Now, what is the template of bank reconciliation statement? Okay, so if you understand the template, then easily you can fill up. Okay, so to show the template, so I'll be showing this particular sample bank reconciliation statement from Liard company, bank reconciliation April 30, 2014, and it looks something like this. Okay, so if you understand this particular template, then for any question, any company, you can do the bank reconciliation statement. Okay, so this is a kind of a template. Okay, so what is the template? Cash balance as per bank statement, then adding the deposits in transit and lessing outstanding checks, and finally adjusting the cash as per bank. Okay, so again, if you go back and then look at this diagram. Okay, so on the bank side, what is happening? Already the first video in this playlist, I detailedly explained this diagram. First, we have a bank balance, then we have to add the deposits in transit, and we have to remove the outstanding checks, and then any errors are there, you have to correct them, and finally you will get the closing. So adding deposits in transit and reducing the outstanding checks. That's exactly what here it is doing, adding deposits in transit and reducing the outstanding checks. So adjusted balance. Okay, so like this. So this is the bank reconciliation, the first part. Now coming to the second part, we have cash as per books. Okay, so according to the books we have. Then there are adding collection of notes receivable, then errors in correction, then NSF check, and then service charges. Okay, so if you notice again, the same thing are here. See, adding the, first of all, opening balance, then adding the notes collected by the bank, reducing the NSF check and reducing the service charges, whatever, and then adding or subtracting the errors made. So these are the, so basically the same thing, whatever you see in this diagram is made in the form of a statement to get the bank reconciliation statement. Okay, so let us, with that idea, let us try to come to this. Okay, so first thing, what is the, in the template, if I go back to the template, the first thing is opening balance as per bank statement, then adding of deposits in transit. Okay, so let us try to do that. Okay, so what is the cash balance as per bank? Okay, so what is the cash balance as per bank? So here you can see cash balance per bank July 31 7328. Okay, so dollar 7328. So I have written that. Okay, and this information I have utilized. Okay, so I'll put a tick mark there. Now next one I'm interested, according to this template, I'm interested is adding deposits in transit. Okay, so let's go for that. So I go for add, then deposit in transit, deposits in transit. So here if you see item number 4, deposits in transit as of July 31 is 2700. See, sometimes there may be multiple deposits, but in this case there is only one deposit in step number 4. So that I will mention here 2007. This is to be added. Okay, so 2700 we have to add. Okay, so that's what I mentioned here, add. So this information has been utilized. That is number 4. Okay, so that's for this information has been utilized. Next, let us look at the template. So what else is there? Is there any outstanding checks that we need to subtract? Okay, so less. So any outstanding check mentioned. Point 2 is about service charges. Point 3 is about cash balance. Point 4 is about, point 5 is about notes collected. Okay, point 6 is outstanding checks. Okay, so that is good. So less outstanding checks. So that is $686. So here I'm saying $686, and here I'll put a minus sign just to remind me that I have to subtract this. Okay. And if I again go back to this thing, any errors? So here there are no errors in this example. Similarly, any errors from the bank side? See, there are banking errors are there. So, but no errors are mentioned. So therefore, the bank part is completed. So I can make this particular line, that is adjusted cash balance as per bank. Okay, so let us do that. So adjusted cash as per bank. Okay, so let's do this adjusted cash as per bank. Okay, so 7328 plus 2700 minus 686. So I'm getting 9342 as the adjusted cash balance. Okay. So now let us come to the company side and then do the company side transaction. So here 6th point is also utilized. So here what we are having on the company side, look at the 3rd point, cash balance as per books 7364. Okay, so I will utilize this amount. Okay, so cash as per books, that is 7364. Okay, so I have utilized this information. That is done. Next, if I go back to my template, okay, so what are there in the template? So cash balance is there, then collection of notes receivable is there, okay, and then some collection fee and interest earned, everything is mentioned here. So let us do that. So here the 5th point is note for 2000 collected in July by the bank plus interest also earned less the fee for 20. Okay, so here I will say add notes collected. So here 2000 note is collected. Okay, so let me look at how they have written. Okay, $2000 notes collected. So here comma, I am writing here 2000. 36 is the interest and 20 is the fee. Okay, so add $36 interest and $20 bank fee and subtract actually. So exactly what is the amount here? So you see 2000 plus 36 minus 20. Okay, so 2016 is the amount. So that amount I have to add here. Okay, so $2016. So this is notes collected. Okay, so no other notes collected is there. So I have utilized this point number 5. Okay, so I got 1, 3, 4, 5, 6. Everything is used. Only one is there. July bank service charges not recorded by the depositor, $38. Okay, so here simply I'll go for less bank charges, that is $38. So here I'll put a minus sign to just remind me that it is less. So finally adjusted cash as per books. Okay, so what is the adjusted cash as per books? So again I have to take this 7364 plus 2016 minus 38. Okay, so I am getting 9342. Okay, so exactly this 9342 is matching with the earlier amount. Okay, so therefore my bank cash as per bank and cash as per book is reconciled. Okay, that is why it is called a bank reconciliation statement. Okay, so let me draw a box around this to make it into a statement. So this is the bank reconciliation statement. Okay, so now if I go back here, the first one, prepare bank reconciliation statement. So this part is completed. Okay, so now let's look at the second one, journalize the adjusting entries at July 31 on the books of Joyce company. Okay, so again let's do the adjusting journal entries. So Joyce company and adjusting entries for reconciliation, and the date is July 31st 2014. So let's do that, and you know the format. So date and account and debit and credit. So again I have given you the standard templates. Okay, so look at it. So first one, here you can see notes collected is there. Okay, so you go to that notes collected this thing, see collection of note. So it will have cash, miscellaneous expense, notes receivable and interest revenue. So these four entries. Okay, so it will have cash, then miscellaneous expenses. So these two will be in the debit side, and then the other one will be notes receivable and interest revenue. Okay, so notes receivable and interest revenue. And if you look at the data, okay, so the note receivable was 2000. Okay, and interest revenue, you see this is the data. Interest revenue is 36, fee is 20. So interest revenue is 36 and miscellaneous fee is 20. Okay, so to make the debits and credits both equal, see what is the total credit? 2036, and what is the total debit? So 2016, if I add, then this also will become 20. So total debits equal to total credits, and this entry will be correct. Okay, so this is July 31st. So this is one entry. Okay, this is for notes receivable. Now what is the other entry? Only one entry is there, bank charges of 38. So again look at the template. So what is the template? Bank charges, how to do? Miscellaneous expenses amount and cash will be credited. Okay, so again July 31st, miscellaneous expenses, so 38. So here it is mentioned 38, so that will be debited, and then cash will be credited by 38. Okay, so finally this will be the journal entry for that. Okay, so I think there are only two journal entries, from 7342 it will come to 9342. If you want, again we can make a T account. Okay, so just for verification. So opening balance of cash was, here you can see 7364. Then there is a one debit entry for cash 2016, and then one credit entry for cash 38. Okay, so now the closing balance, so will be 7364 plus 2016 minus 38. Same thing, 7364 plus 2016 minus 38. So the total balance will automatically come to $9342. Okay, so this is about the adjusting entries. Okay, so let me again make a box, so this will become a statement. Okay, so this is the complete answer for this particular question. I hope you learned something from this particular example. So if you like it, so please press the like button, and you can subscribe to my channel, and you can refer your friends to this so that they can also get benefit. So I'll be doing maybe one more or two more problems on this particular subject in the subject of notes and cash reconciliation in the coming videos. So see you in the next video. Thank you.